Okay, we'll get going here today. This is a tough day to kind of talk about the markets, not because we're down 8-9 cents on corn and 20 on beans. It's just we probably got the biggest report of the year, right in front of us tomorrow. And the big question today is, well, what's this report going to say? And I mean that's just, we don't know, okay, and no one knows, and everyone's gonna have to wait till 11 o'clock tomorrow. So, we just wanted to go through a few things here today, and the reason why is we're trying to stay consistent on these Tuesday webinars, even if reports come out on the very next day. But as we look to tomorrow's report, I think the number one thing you got to keep in mind, it's going to be volatile. Okay, we fully expect it to be volatile. When you look at the corn market, historically, we see about a 4% move on corn. So if you got $5 corn, that's about a 20-cent move. So as we head into tomorrow's report, we need to expect this thing to move 20 cents right away. When you look back to years when you've had extremely tight ending carryout levels, okay, and I'm talking below 1 billion bushels, around 1 billion bushels. I know we're at 1.5 right now, but you got to go back to 2011, 2013 when we had that type of carryout, okay? And with those tight stocks, we've seen this market move as much as $1 a bushel the week after this report, okay? So this report can be extremely volatile. When you look at the soybean market from a percentage standpoint, not as big of a move as what we see on corn. It's about a 3% move. Therefore, you can expect about a 40-cent move tomorrow in either direction. When you go back to years of historical tight stocks, we've seen as much as 75 cents to $1 move. So, we just got to get this thing set up in here right now. It is going to be volatile. Now, as we get to some estimates, this is what the trade is really looking at. On corn, they're thinking that the March stocks are going to be around that 7.77, and beans around 1.55, and wheat around 1.27. I guess what we really want to point out here is when you look at the wide range on the soybean side of it, from a low estimate of 1.44 to a high estimate of over 1.8 billion bushels. So, there's just a wide range in here on some of these estimates, okay? And that's what's going to keep this thing volatile. If we have a bullish move in the market tomorrow, okay, it's got to come, I think, really kind of from the stock side of it. That's how the trade is positioning itself right now, is that we're looking for bullish move. It's going to come on the stock side of it. I think the one to watch really is going to be the corn side of it. When you look at the stocks figure, everyone's expecting this thing to even drop a little bit more than this average trade estimate where the current price is at. So I think we just got to be a little bit cautious right there. As we get to the acreage side of it, our big thing, and we've highlighted acreage over the last couple of months, is that we think that this combined corn and soybean acres will be in the 180 to 185 million acre range. And if we jump down to these average trade estimates, we're at corn right now at 93.2 million acres, beans at 90 million acres, a total of 183.2. That fits well into our range. The one thing we find interesting with these estimates, though, is that this corn estimate is above that USDA Outlook conference by 1.2 million acres. Okay. The other thing to notice is the wide range on the bean acre forecast. That's a 5 million acre range. So again, with stocks, you're going to get some volatility. To me, focus corn and beans, and then look at it to fall into that total acre range. Now, I just want to put up a couple charts here to show the volatility of the market moving. This is a May soybean chart, and when I did this a little earlier today, we were at 13.85 on soybeans. I know we're a little bit lower than that, but if I figure beans give or take at $14 and where we've traded at the last couple of months, if you look at $1 move, that's $13 to $15, and what we're probably going to see as this range as we move after this report. We're going to move in one direction or the other. Now, when you put this on a weekly chart and head all the way back to 2012, that dollar swing in either direction does not look as substantial as a daily chart, but it is still $1 a bushel. And the one thing what it will do is set the trend up as we move through the spring of the year. When I get to the corn side of it, I probably got a little higher range on here than what I needed. Maybe I should have done 75 cents and gone 4.75 to 6.25 on corn. But here's that dollar range when you have tight stocks. You'd argue a move from 4.50 to 650. I mean, this is a significant move, but just like beans, you can see we've been in a relatively narrow range over the last couple of months. This market is set out for a breakout in here after this report. When I get back to the weekly chart, okay, and I have that 650 and 450 numbers locked in here, we're really getting that 650 level from, it goes back, kind of closing that gap area from 2013, and then 450 is the highs that we saw back in 2016 and 2019. So when we're sitting here at 550 a bushel, that next 75 cents to dollar move really makes it look like a logical breakout. Now, if it wasn't for the report, okay, here, this chart would be the focus of this market spotlight, okay? And what bothers us with this chart, and it is the managed money position in corn, is that the large specs have their biggest net long since 2011 and is nearing their record net long position of almost 430,000 contracts. They're net long 388,000 right now. And where this is concerning from is if we get a sustained move higher, it needs to either be led by the cash market or the managed money, okay? Managed money has not built up of a net long position quite like this, okay, in 10 years. The reason why it really has our attention this week is on Friday when this report came out, speculators were net buyers of corn, but yet the futures market went lower, okay? If we go back to the summer of 2019, what gave us the sign that the market was peaking out is we had speculators buying and the market went down, okay? So this is a big concern with us here on this corn market. Now, when you have such a big report out on Wednesday, either this report, you're going to throw it out the window and say, hey, the market, or this managed money position, either throw out the window and the market went up, or if we break in here, everyone's going to say, well, man, this was a sign that we had. But I've got to tell you, without this report in here, this chart is a concern of mine on this managed money position. Now, some final thoughts in here right now. This is going to be a volatile report. I think that corn is going to actually be more volatile than soybeans. The bulls have really positioned themselves to get the bullish news from the stocks report. And as some of the biggest bulls in corn believe that this corn ending carryout level needs to get down to 1 billion bushels, and that beans, okay, that we have to ration demand. We're not going to have enough beans left here domestically to crush. The bears are looking at this acreage report and saying, okay, things are tight in here. We're going to plant, 182, 183, 184 million combined acres of corn and beans. We always get right before this report, what should we do on the markets? With the volatility and for how much premium bean options are, we would favor more on going the corn option route, okay, than beans. When you look at $1 out of the money on a bean calls 8 cents for a May option, I mean, that's pretty expensive in here. Before I finish up, if you have some questions, feel free to type them in. The last thing is, and what I try to write on the report, and I'm going to share here is, what's my gut feeling on this report? And my gut feeling right now is that I think the bulls on old crop could be leaning the wrong way. And I'm just bringing that up because when we measure stocks, we have on-farm stocks and we have off-farm stocks. And off-farm stocks are in the elevator. And when we had stronger prices in here from harvest throughout the winter months, farmers are very aggressive in delivering grain to the elevator. Okay, so it is a lot easier to measure this grain when it's sitting in elevator storage than it is sitting on farm. Okay, so to me, if there's a little bit of a surprise in here right now, okay, on this report, it's that these corn stocks could maybe be a little bit bigger, okay, than what the trade would really want to think. We got livestock numbers down. Again, that's just kind of a gut there, but leaning a little bit opposite on a gut feeling compared to where the trade is. The other thing is when I look at it on the acreage side of it, and I know I've highlighted that we can get combined corn acres in the 184, 185, or combined corn and soybean acres in the 184, 185 million acre range. That probably will not show up till later in the year. So if I use that 180 to 185 as kind of my target, midpoint's 182.5. The average trade estimate's at 183.2. Maybe that everyone's just feeling these corn acres are just, and bean acres are going to be a little bit higher in here right now, and that we could be disappointed. Again, this is a tough report, okay, and it's going to be extremely volatile come 11 o'clock, and I got to tell you, tomorrow at 12:30, we plan on getting on live, and maybe we'll only have a few slides, but take some questions in at that time, and let you know what our quick reaction is to what the USDA gives us. We don't have any questions in here today. Again, thank you. If you have any suggestions in upcoming webinars, let us know. Have a great day.